Good afternoon, everyone, and welcome to today's webinar hosted by the Payments Association. We're talking today about the global arena of how instant and real-time payments work with digital wallets. My name is Michael Salmaday, and I am CEO of Payments Innovation Consulting. And I just need to cover a few housekeeping topics before we delve into the discussion. So first of all, there are captions available for those of you who may find my English a bit strange, or those of the others. So you can turn those on at the bottom in a button. You will also at the bottom see a Q&A tab where you can submit any questions, and you're encouraged to do that if you would like to do that. And I will try to weave those into our discussions. You can also submit questions anonymously if you prefer to do that. If you have any technical issues, there's a chat box where you will reach the lovely colleagues from the Payment Association who will help you with that. And the final comment is only that this webinar is being recorded, and you will receive a link to watch it on demand in the next 2 days. So keep an eye out for that. Okay, I think that is all the housekeeping that we have. So let me just quickly get live the lovely colleagues that we have here. There's Paul from MasterCard. There's Michael from FIS. There's David from Polymath. And there's Annie from TerraPay. And before we get into the meat of the discussion, maybe just a quick, to get us in the mood to talk about wallets. There are, of course, as you're sure aware, several different kinds of wallets. There's things like the Apple Wallet, which are basically just containers. You put in your credit cards and your cinema tickets and your loyalty and everything. And that's a very common kind of wallet that we find in Europe. Then there are the sort of prepaid wallets like the PayPal and Starbucks, also very successful wallets where you basically manage some amount of money that you have in this wallet, which is hosted somewhere else where the money actually resides elsewhere. And finally, there are things like stablecoin wallets where actually the money is in that wallet. So if you lose the wallet, your money is gone. So you're ready with those three different kinds of wallets. One can see there are different kinds. So we have a lot of heterogeneity there. And also geographically, we see a lot of difference. Europe, we have the digital euro wallet coming. We have the Wero wallet coming. We have the EU identity wallet coming. In Asia, they're completely crazy about wallets and super apps. Everybody hardly ever leaves them. And in UK, maybe it's somewhere in between. So that's the sort of background of this wallet. And now I'd like to go into our panel discussion where everybody shares a little bit their views on where the wallets are, where they're going, and whether we're going to get to maybe a more harmonious way than we currently have. So Paul, maybe you could kick us off with your thoughts from the MasterCard perspective.
Yes. Well, thank you for having me here. I'm Paul Francis Valvik, joint from commercialization and go-to-market at MasterCard. I would just like to start with a little bit of around the world. So I'm pretty international as of the start of my life. Born in the US, work a lot in London, and I live in Norway. And one of the things that I think is quite interesting when you wake up most mornings in Norway is that I live in a society that has pretty high trust and one of the highest penetrations of digital transactions in the world. And that means that the ecosystem is very well developed, and there's a high level of trust and collaboration between participants. I think what we're seeing across the world is two things: the evolution of different kind of wallets, and also the introduction of real-time payments, which is part of what is on my agenda every day. I think that the main part of why there is such a hot topic around both wallets and real-time payments is because it is the way that we communicate. We communicate instantly. We communicate without deferment of messages being sent. You know, I still do emails, but mostly in society, we communicate straight on. And that's kind of where most of the evolution that you see, either it being cash displacement or it being other elements that are financial inclusion, et cetera, et cetera, are really prevalent in the market. But I think at the end of the day, it's about that we need to understand that different cultures, different areas in the world have different ways of paying traditionally, but a lot of these are converging or going to places that are universally understood around the world. And it has to do with that we're becoming more real time in the way that we actually communicate and live our lives. So I think that's the underlying theme for why it's important to look at these two things together.
That's wonderful, Paul. Thank you very much. You also mentioned the topic inclusion, which I didn't mention in my introduction. That's a big topic, of course, in the African wallets and Indonesian wallets, absolutely. And you say there's a trend towards conversion. One could argue about that one. At the moment, I get the impression there are more and more wallets of more and more different kinds appearing, but we'll delve more into that in a moment in the webinar. Michael, I'd like to come to you. What's FIS think about wallets?
Hi, Michael Thelmany. I'm Michael Wallace Brown. Very glad to be on this call. Before I get into what FIS thinks about this, I would just like to say, from my background, you can hear from Cape Town, South Africa. Before I joined FIS, I was very lucky to have run Ericsson's Mobile Financial Services, which is one of the largest mobile wallet providers around the world in 24 markets. I think they've got over 100 million daily active users, and that's really interesting because most of that is coming out of the big emerging markets. So to your point, Michael, I just want to make that quick point. Where we see a lot of take up is the very rudimentary financial services where people are coming online for the first time and are able to move money for the first time using a very simple USSD wallet. They're normally unbanked, they don't have a bank account, and that's where there's a lot of growth coming in the space. But those wallets are USSD, which is telco technology or signaling technology based, and that's the first footprint for these big emerging markets, whether it be in Africa, whether it be in Middle East, or whether it be in Asia. But from my side, I've been very lucky to work on the telco side. You can talk about those telco rails, but then also with FIS, that is one of the largest providers of banking and payments technology for some of the largest banks and PSPs around the world. So getting that picture and what's happening there, that's also really interesting because you see that same kind of user interface from a wallet, whether it be Apple Pay, et cetera, like you've mentioned, which is significant. And your point there is, I think Paul was bringing it up, it's all about trust. And when you hold this thing called a mobile phone in your hand, and you're connecting to a mobile network, you feel very trustworthy on that. In Africa, what you're seeing is that people trust those mobile phones more than they trust banks, to put it mildly. So there's that element of trust, but that user interface with the mobile phone is very significant in this orchestration of, let's call it payments, banking, connectivity, communication, all the things that we probably will touch on. From the FIS perspective, I don't want to speak too far in the future. What I can say is there is a lot of exciting things happening, but there is a legacy infrastructure that is there that holds a lot of data, moves a lot of money, and we are very well positioned to work with our big customers to facilitate the next generation of banking and payments. You spoke about a lot of different wallets. What I see is the future is programmable wallets. Potentially they are the new ERP for money. So, they're orchestrating things like tokens, they're orchestrating the multiple rails, whether it be telco, whether it be card networks, whether it be banking networks. And then most importantly, compliance. That's a really key thing. So all that could potentially happen as an orchestration level in a wallet infrastructure. And actually, we're seeing that raise its head today. So I'm very excited to talk a bit further on this. I've done a few cool startups too in identity management. That's another really key thing when it comes to digital wallets. I did a startup called Prove.com. People could look it up. That was an investment from Verizon and American Express. But identity management and digital identity is really critical also in this whole story of wallets moving forward. But thank you for the opportunity, and I look forward to speaking some more.
Thank you, Michael. You raise a common theme of trust that is surely there. And you brought in another angle, which I really like, is sort of that some wallets come more from the banking space and some others come more from the telco space. And you can speak about that very competently. So that's another dimension maybe of diversity and or which we need to converge on. And also the programmable wallets, which of course are a very exciting idea, sort of in the days of agentic commerce or maybe smart contracts and all that. Yeah, wonderful. Okay, David, maybe I can come to you. You're from Polymath. What do you and your company think about this topic?
So thank you very much for inviting me onto this webinar. As you said, my name is David Parker. I'm the CEO and founder of Polymath Consulting, and we work across the cards and payment space. I'm also the lead ambassador to the Payments Association, and have also been representing the Payments Association in many of the discussions ongoing in the UK around open banking and where that's going, the strategic working group. And sit on a number of our project groups, including Project Open Banking. I think there's a couple of topics I'd like to bring to the table, maybe that just for us to think about. One is interoperability and connectivity. We are seeing, I mean, part of this conversation is also around instant real-time payments. And I think it's quite interesting how the two areas can merge together. But certainly the interoperability and connectivity of wallets globally is in some respects leading to an alternative method of moving money and everything else. And even within countries, the need to deliver that interoperability and connectivity between wallets, I think, is an area of talking. When we move to what I'm going to call the Western world, because like some of these callers here, I've been lucky enough, I've lived and worked in Asia for 5 years, Middle East for 5 years, and now I'm in the UK. So quite global experience, but certainly in the more developed markets, if we're looking in Europe, where Apple have a 50% market share, we've had a very strange scenario here, which has been that if you drive a BMW car, you have to wear a suit. Now, of course, that's a stupid statement. No one sensibly is saying that. But actually, they are saying it because if you have an Apple phone, you had to pay with Apple Pay. There was no option. So let's be honest here. With Apple being forced to open up the NFC chip, why would you be forced to pay with Apple Pay? You wouldn't. You may have a different type of wallet, a wallet more in tune to your lifestyle. If you think about it, the main methods of wallets in certainly the Western world, not in Asia, of course, have been tied into the technology you have, Samsung, Google, Apple. So now we may have a sports wallet if you're a sports fan or something like that. So I think there's a big change coming around who runs wallets and what they may do for you. I think the next thing that we should be aware of is what's something coming out of Asia done by the International Bank of Settlement, which is Project Nexus. Project Nexus is about linking real-time faster payment networks together. So now suddenly, if you've got a wallet in the Philippines, which is linked through their local faster payment scheme to a wallet in Singapore, money can flow between the two in 10 seconds. That effectively eliminates what banks have done for years. So Project Nexus coming out of the Asia Pacific market, currently in trial being developed by the International Bank of Settlement, I see is having a huge impact on wallets and what they deliver. And the final thing I think that, again, I'm going to mention Apple, but I think it's already been talked about in this conversation, is identity and wallets and the merger of the two aspects together. And, you know, with the new Apple operating system allowing you to hold your ID on it, many countries are now allowing digital driver's license to be built into their wallets and stuff like that. This is a direction we are going down very fast. A lot of governments, I feel, are behind the times on it. But at what point do you not have to start carrying all your paperwork with you, and basically your wallet becomes a true wallet in that it holds both your identity and your funding methods and movement of funds? So I think those would be my 4 key topics to throw into the mix. I think it's worth having a conversation about.
Thank you, David. I love your analogy with not being allowed to wear pajamas in a BMW. Thanks for that. What I'm not quite so optimistic about is sort of Apple opening up or being forced to open up. Android has been open for the last 12 years, I think. I'm not aware that a huge amount of open wallets have made use of that. So let's see if
But if you haven't got access to half the market, then you're only developing something for half the market. We are now getting to a point where you can develop something and actually have the whole market available. If you're a businessman, it would be very strange to go to market and say over half the market, I think it's about 60% in the UK, in the US it's 90% or 85% of the most affluent all use Apple. So you're cutting yourself off huge percentages of the market. It's not economic. Only now you have access to the full market. And we've already seen that in Scandinavia with the first wallet competing against Apple launched over there. So Scandinavia now has a direct competitor to Apple launched over there in terms of being on Android, and that was announced about 4 or 5 months ago. So we're starting to see that already. But it's the first time businesses actually have a chance to compete on a whole market basis.
No, that's a fair point. We will see. I'm still afraid also for European sovereignty and UK sovereignty that a lot of it is just going to be still within the Apple ecosystem, but opening it up is a thing in the right direction. But let's turn to Annie, because you have the answer to us all. We've explored the various differences in different kinds of wallets and different geographies and coming from different players. And I believe you're trying to bring this together, the sort of Digital Wallets Council in TerraPay. Maybe you can tell us a little bit how you see this path towards convergence.
Thank you, Michael, and it's a pleasure to be here. It was fascinating to hear what Paul spoke about, inclusiveness and real-time payments, and then Michael spoke about USSD, spoke about how African wallets kind of operate in a very interesting way, and then as David spoke about interoperability. 2015 is when the four of us decided to do something crazy. The idea was very simple. The idea was we all came from the telecom, like Michael, we came from the telecom space. We thought of how can money, if an SMS can be delivered to anyone at any point of time without having to worry about, are you in the UK today or are you in the US today? And if an SMS can be delivered instantly, to your point, Paul, instantly, why can't money? That's where one of the genesis of the fundamentals of TerraPay came in. It's all about everything has to be real time. And the definition of real time was seconds and not sometimes 24 hours. So that was one position which we took. The second one which we focused on was, I think, with MasterCard and with others, there is an established network which is there for how money can move using cards. Swift has shown us the way, and I used to work at FIS a number of years back, so I know exactly how, for example, in FIS and everyone's trying to move to money, from bank accounts to account. What didn't exist in 2015 was the position of wallets and how wallets could send money from one to another. An Alipay wallet sending to a Nequi wallet in Colombia, for example, did not exist. It was just all silos. And today, wallets, in shape or form you look at it, they operate in almost like a geographical silo. So that was the second pillar. And the third and the most important pillar was, if you look at wallets in general, either you're looking at, Michael, you spoke about, pass-through wallets. I think Michael from FIS spoke about, telco wallets, and telco wallets in common various flavors. The underlying position was, how can compliance become a key aspect of money movement? And so we put those three pillars together in 2015 and created something we used to call it as IOX, Interoperable Exchange. We couldn't find a better name in 2015 till the time we came up with the name for TerraPay. So it is a very fascinating thing, and almost remembering my days of whiteboarding, trying to do everything which you want to do today. But we don't have the solution yet, Michael, but I think watch the last 10 years, what we are trying to create, and we have been, I would call it, successful. Today, what we have created is an interoperable wallet infrastructure across 151 countries, which allows exactly what Paul was talking about, real-time money movement in seconds, what Michael was talking about, how can a stored value wallet from a MNO, a mobile network operator, interact with a non-MNO wallet or maybe a bank wallet in a more seamless way, using a network credentials where trust comes on the forefront, security comes on the forefront, regulations come on the forefront, and more importantly, how can everybody understand the standards. So that's exactly what we've been trying to propagate. So for us, we don't do anything other than wallets. So, from Latin American wallets to the Asian wallets to the African wallets to European wallets, and of course, the US, when you look at Venmo and we look at PayPal, I think what we're trying to create is this whole ecosystem for interoperability. And this topic to me is just fascinating because this is what TerraPay is all about. So I'm really happy to bring me into this conversation, Michael.
Fantastic. I have a few follow-on questions, but just for the people watching, we have several hundred people watching. Please do make use of the Q&A tool and put in any questions. Otherwise, I will just ramble on with the questions that appear to my mind. But if you have much better questions, please do submit them and I will put them in. But just to come back to you, Annie, this sounds absolutely wonderful, this interoperability initiative or consortium or standardization or whatever it is, whatever it's called. But I didn't maybe I misheard it, the commercial aspect. How do you actually make this thing work on a commercial basis across borders, across these different players, across different technologies, across different platforms? You can standardize technically a lot, but how does the commercial interoperability work?
And I think that was one of the interesting positions when we looked at interoperability. So when we started TerraPay, we said we're not going to boil the ocean. So we looked at the simplest of the use case, where we said is, how can someone in the Philippines send money to someone in Europe instantly? So it was like almost, you call it like send money. Paul, you have it with you have your own Mastercard send as a proposition as well. That Mastercard send kind of in a way uses the TerraPay infrastructure at the back to some markets. But that was the first use case, Michael, which we looked at. We also looked at the second use case was, from a P2P perspective, person to person. How can we make that a person to business and a business to person and a business to business? So we kind of moved one notch up from the money movement side itself, but make it to the next level of how consumers will see money movement happening. And the third, stage, which we are today, is to see how merchant pay can become a proposition using the same infrastructure, which means now, for example, say M-Pesa wallet in Safaricom, and everybody talks about M-Pesa, everybody knows about. Assume an M-Pesa customer walks into, I live in Dubai, so maybe they come to Dubai duty free here, want to use their domestic wallet, which is the M-Pesa wallet, using the domestic experience, do a cross-border transaction. That is, to me, interoperability. So what that meant was, from a commercial standpoint, it needed to create a network, an infrastructure, a scheme. So it's taken a number of years to actually get to a point where you could say TerraPay is the scheme for not just the commercial standardization, the data standardization, the semantics of how data flows, what kind of data, what kind of AML CFT flows. That is that network. So commercials was an important aspect of how money but it took us a while. It's taken us 10 years to kind of get there.
Wonderful. No, I thought you'd taken care of that, of course. Okay, excellent. A lovely question has come in from Ale Vaglini. It's one of my favorite topics because people only talk about the consumer aspect, and people always forget B2B, regardless of whether you're talking about open banking or wallets or instant or anything else. B2B is always forgotten, but B2B is about 80% of the market, and that's where the most friction is, and that's where you can make the most money. So thank you, Ali, for raising that. Paul, you will have some thoughts on B2B use of wallets.
I think specifically, I'm more thinking of the fact that the reason why B2B is this, I wouldn't say uncharted territory, but it's a complex territory. But if you look at some of the places around the world where you now have real-time payments solutions, we have 12 across the globe in different countries. One of the aspects of some of the schemes that are put in place is that if you look at the lower segment of B2B, you can actually use the same type of rails, the same type of scheme setup for some of those lower payment parts. A number of schemes, like in the US and in Europe, have increased the limits of this. And that means that there are opportunities to go into this for companies. I think that, the wallet part of it, and Ani, you're touching into it. Maybe there will be elements of this that will be clearly targeted towards B2B. But what we see is that the blurring of the use cases between P2P, P2M, and B2B with the introduction of real-time payments is kind of leveling that out. So the lift in order to get into those flows that have predominantly been shapen by different approaches now can be taken with kind of the same approach, but going towards different segments, right? So I think the question is, how can you utilize, because it's really down to the use cases, how can you replicate some of those use cases that are relevant for P2P, P2M, and actually convert them into B2B without the heavy lifting? And I think that's one of the really, really big promises of real-time payments across the world. If you marry that with how you look at wallets and how they are utilized, that's key. And I'll just leave it hanging there. There's a whole generation growing up now, which is digitally native, right? So in some years, the digitally native will come and say, why isn't this B2B conundrum solved with digitally native approaches? But the Gen Z question, we can get back to that one. That's very close to my heart, being a father of 6.
I mean, I'm an old fogey, but even I don't understand why payments can't be more instant and easier to use as well. So
I think what's interesting here is that when you talk about the Gen Z and Gen Z and wallets and things, is there is almost an assumption by the younger generation that payments are instant. And what I mean by that is, if a payment doesn't arrive, I have many a time said to my daughter, it can take up to 2 hours. And she's gone, no, it's arrived. I'm still on the phone to her. There is an expectation from them that the funds, when you say, I'm sending it now, by the time you finish the sentence, the funds have arrived. And I think where this is going to get interesting is as this moves international, whether with the digital pound or whether with Project Nexus or anything else. Even some of the big wire transfer services say, it can take up to 2 days. And I sent some money to a friend in Canada. It was there within an hour. The time frames of how quickly funds arrive is reducing so much that there is an expectation it's instant. And if it's not, the question is why?
Absolutely. I think it's not even only the young people, right? I mean, I don't understand, well, and I work in the payments business, why payments isn't as fast as email, right? I know the reasons, but I think fewer and fewer people are ready to accept it in the B2B world and in the consumer world. Sorry, Paul, you were going to say something.
Yeah, David, it's really interesting because you're talking about the expectation. There's a lot of research done on Generation Z and what their expectations are. And what I find fascinating is that they have very low loyalty to one method. So they will have backup solutions, they will have several solutions, and if something doesn't work, they won't return, right? So one of the promises is that things have to be instant because that's how they communicate. but they also have a very low threshold of loyalty. But one of the things that really surprised me is that they want to have more certainty. So I thought I was the risk-averse guy being 57 years old, but the Generation Z want to know that they have certainty and they have trust in what's going on there. And that's maybe coupled to the fact that they want to see it right here, right now. And the more you can get into that with any process that's connected to payments is incredibly important, because you will be speaking to the next generation, which will be running the world when we're bicycling around.
Okay, I think we've covered the generational and the expectation topic very well. Thank you for that. There are a couple of questions who've come in around sort of DLT and blockchain and smart contracts. I think that resonates with what you, Michael, was saying about sort of conditional wallets and programmable wallets. Can you enlarge a little bit on that?
Yeah, and once again, Michael, I'm going to take it from two levels, just to pick up on some of the other points other people made. You know, you talk about Gen Z, but there's a whole generation of people that, it was barter, then it was cash, and that's coming from these big emerging markets. The next 2 billion to 3 billion people that are going to be joining the digital economy, and, are going to be coming from Africa and the Middle East. So that's the user experience is really key there. And, there's a simple thing there, and this is going to lead on to the question you've just asked, Michael. Airtime as a currency. That's how this explosion of wallets on the telco side happened. Airtime as a currency. So you bought some airtime, and then you use that airtime or that stored value to now go and make some payments or transfer some money. And M-Pesa is the key case study for that. And for me, then that also opens up the question of if you have the stored value, tokenization is something that really, really, really springs to mind for me, because this brings us to the whole question of, this digitization of value. The Genius Act, I think, has really kind of shifted things. That's coming from the US. And I think the MiCA Act in Europe is also lining things up off the back of, PSD2, PSD3. So there's some really interesting regulatory frameworks that are now moving the market in a certain direction. And this then brings us to programmable payments, which I think is a very, very important, concept to make. So if we're talking about tokenized cards as a source of funds, okay, or a source of moving money that goes into a wallet, or we're talking about tokenized deposits, okay, or then you're talking about CBDCs, or you're talking about stable coins, which are two different things. All of a sudden, this whole world becomes a very, very, very interesting place. So for me, that's a very long discussion. But when we talk about interoperability, I think the TerraPay chap, Sunny, brought it up. We're almost in a TCP/IP moment. So if you think of the days of when the internet all of a sudden went global, it was a very simple protocol called TCP/IP that all of a sudden, opened this thing called the internet up. I see a very similar movement coming, particularly when it's digitized. That really helps on B2B payment side. The rails, whether it be card rails, whether it be telco rails, whether it be bank rails, all those things. So I think that moment is coming. I was even going to say even further, if you want to talk about telco networks, you have GSM networks. They used to be very closed, and all of a sudden they open them all up. So now you can make calls all over the world. So there's a very similar environment. So we can dig quite deep into a lot of these topics. But for me, I think it's about cooperation. It's about coming together and making sure we have the right protocols, just like with TCP/IP and the internet. And I think all actors in that ecosystem have a really important role to play. And at the end of the day, it's going to be for the benefit of consumers. It's going to be the benefit of enterprises. And it's a really exciting time. I'll stop there.
I mean, Annie, you're basically building this TCP/IP of wallets, if I understand you right. So Maybe you can share a little bit more about that. We've also, for example, had a question around fraud and AML and everything. So how is that going to work sort of cross-border, where maybe in Africa they have different ideas of how to do KYC and KYB, but it still has to work globally. How do we get the crime and fraud under control in this global interoperation?
Oh, thank you. So, just to kind of take a step back here, as if you look at interoperability, the telecom industry actually, made roaming. Roaming is probably the most sophisticated interoperability network. You land somewhere and your phone works all the time without having to do anything. I think that is where I think money movement should go at some point of time. It's not there, but I think that is the goal. I think from where we see it. Money. I think Paul will kind of and Michael will agree to me this. And money movement, and especially when you look at cross-border money movement, it is actually a business of compliance and a business of liquidity. So, as Michael was speaking about, stable coins and the other digital assets, what is really coming out, the underlying position is the trust which is required to be able to see, hey, I have your money so that I can do the necessary payouts. It's a trust behind that. So liquidity plays a big role in terms of why what we are speaking about is why can't money real-time payments happen? And if you see the underlying position is the banks and the corresponding banking network in a way kind of restricts this real-time payments. If we really look from a banking infrastructure perspective as well, the SWIFT network is actually a messaging network, and the SWIFT messaging is actually instant. It's actually the underlying money movement, which sometimes takes sometimes days. So to me, the digital aspect of how stable coins or anything can move that, that is Paul, that is the real position of how money can be moved, and then we are there in that space right now. I see in the next 5 years, this conversation in a slightly different level altogether. So that is one part of it, and I think to answering your question on compliance and fraud, it is a business of compliance, and that is one of the key aspects of how, again, as TerraPay, what we're trying to bring in is the KYC and the AML and positions in Kenya. How can they be seamlessly applied to when someone from China or someone from the US is able to make that work? That's what, again, the corresponding banking network really does. What we're trying to do is through APIs make those data fields availability on an instant basis and make those transactions. It's not just about technology, liquidity, but also the AML CFT. So when I see TerraPay today, 92% of our cross-border money movement happens in 15 minutes. It's a Sunday, it's a bank holiday. But what is fascinating is when I look at our data set for wallets, we see 97% of our transactions globally delivered within a minute. It is, and in this, what we're doing is AML, we're doing CFT, you're doing currency conversion, you're delivering the transaction. And I think there was a question about, is the money actually delivered? So you get a confirmation of the delivery itself. And sometimes in some markets, the mobile wallets also bring in a very interesting concept of, verification of payee. So he actually is, a lot of RTP networks are today gearing up for that, knowing the payee before you actually send the transaction itself. The mobile wallets build that network itself. It was all about bringing them together. And that is, I think, where the next money movement, real time, fully compliant, using various rails for liquidity, is where the real movement is happening.
So what's your view on Project Nexus then, which is obviously the International Banks of Settlement project to actually link real-time payment networks in individual countries together via the central banks? Because surely that eliminates a lot of all the liquidity issues and everything else, because this is being then run by the central banks and delivers the literally, Pix Pay in the UK, in Brazil can pay, to SEPA in Europe arriving in seconds. There's no liquidity on that. It's central bank to central bank, all sorted via them. What's your view on that then project that's underway and how that could roll out globally to the real-time payments network?
Exciting. I think the way this has been designed is amazing. For me, being an entrepreneur, there are two parts to it. One is, having a great story of, how money can move, and then actually when the rubber hits the road, how does the implementation of that project works? And I'll tell you why. I have a first-hand experience, and Michael, you're from South Africa. You kind of know that there is a project called TCIB, run by the SADC BA, in Southern Africa. 15 countries down, Tanzania and down. We actually run a Project Nexus already in Southern Africa between the 15 countries for money movement between banks to banks, banks to mobile wallets, mobile wallets to bank accounts, and mobile wallets to mobile wallets. It's 9 years. We got 15 regulators trying to come together to make that work. So the platform, everything is all there. It's a fantastic initiative to bring money movement on the forefront. I think it will boil down to, if you really ask me about Project Nexus, and we have been we have looked at that project. From it is exciting. It is definitely exciting to boil down to how we implement it.
I mean, there are so many initiatives around the world which are trying to harmonize this, right? I think about 15 already at BIS, of which Nexus is one. There's the G20 initiative, which has been going for years. SWIFT is doing also. There's so many things going on. So, but you are the one I'm most aware of in the wallet space, right? The payment space. I think that's a very heavily competed topic.
I suppose why that I highlighted the Project Next one is it's driven by the central banks, and central banks, how would you say, tend to have a certain weight behind them.
Okay, I'd like to come back to Paul, because we've talked about some of these initiatives going on in wallets, and we haven't explored all of them. There are also open banking things. Also, for example, BIS Agora is trying to connect the world using open banking. So there are all these initiatives from all these directions. But maybe just a blunt question to you, which I'm just passing on from the Q&A. Does MasterCard feel threatened? You used to have a monopoly, a duopoly. With all these things going on, do you think you'll be replaced by stable coins and by other things, or do you feel safe?
I think that what we do is we have a card network, but we're also present in 12 countries doing real-time payments. So for MasterCard, it's incredibly exciting, all of the good things that are happening in the payments industry. And we're at the forefront of, helping driving some of this change going forward. And I think, based on the discussion which has been ensuing here for quite some time, I think that there's one really, really important element that if you look at wallets and real-time payments and how they work together, one of the really key parts that we started this with was trust and how you instill trust. And one of the really big things that we've seen is that fraud and preventing that it's super important to kind of take that in the account-to-account world with real-time payments. We launched A2A Protect in the UK to make sure that we can prevent and protect and recover on a real-time payments-based platform. Now, when we talk about cross-border solutions, you have to have the ability to trust your domestic origin, it's because you're starting from your domestic origin and you're going cross-border. So the basic premise is making sure that your domestic real-time payments infrastructure, which is connected to a wallet, is safe and secure. And for us, that was a really important thing that we looked at. We've launched that in the UK first, but it's something that brings resilience to a space that will evolve over into cross-border with all of these great initiatives. So I still see a very bright future.
You're not directly answering my question, but I understand. I can imagine that you feel quite comfortable because MasterCard's always been super smart in embracing all these new developments. It's you're no longer a card organization, even though you're called MasterCard. You're a technology.
And that's kind of what is at the center of this. There's this innovation between, Ani, you're talking about how you innovate on wallets. I'm really focused a lot on the real-time payment space. All of this innovation coming together, removing that friction, making sure that the experience, whether it's a domestic, whether it's a regional, or whether it's a cross-border transaction, right? That is the key. And that there is a lot of runway to cover to make that even simpler, not to talk about what happens when people start to be financially included. They might start out with a wallet, they might go on to open an account, and then they might go on to have a card, right? And then you're fully into the ecosystem, which is there. And it's there's so many people that can be brought into that. And I think these technologies are enabling that ecosystem to thrive and be innovative.
That's for sure. I mean, one thing I do just want to check with you because you haven't quite convinced me yet about the convergence, quite honestly. When in your opening statement, you said you see a convergence of wallets. And I tried to say, about half a dozen variants of wallets and geographies and kinds. And here in the webinar, we've explored even more. So I'm seeing more an explosion of different wallets. What makes you so confident that this will converge?
So maybe I can be clear on what I meant by convergence. I think there's an explosion of wallets around the world, for sure. I agree with that. But the convergence happens on the use cases that have become established. So that's my point. Competition is good. So it's good to have lots of wallets around. But the convergence on how you do certain use cases, like, for instance, P2P, is pretty uniform as you see it. So that's where I see the convergence is coming. But the other use cases that you can develop even further, we had the B2B example, right? We're at the starting point of that. And then you'll see innovation, you'll see plateauing, you'll see adoption, and then you'll see convergence. That was my point.
Okay, I take your point. Again, I'm afraid I don't remain entirely convinced.
Which is good.
The SEPA development. There were 27 countries in Europe who all did payments in a different way. And basically the use case was the same. I send money to you. But still, they developed lots of things. And there was no convergence until the regulator stepped in and said, we want SEPA. So I'm wondering whether the regulator will be needed, but who is a global regulator to actually orchestrate this? Michael, do you have any thoughts to support Paul why you think convergence will happen?
Yeah, well, I was going to say, it depends how you define convergence. I do think there'll be multiple wallets, but it's like what's happening, on the orchestration layers that are going into the wallet. Let's take AML and KYC. I see that, for example, being baked into wallets. So you've got this embedded compliance. And for example, that's what FIS as a company prides itself on is the way it's built these compliance frameworks. So for me, it's not about how these different rails will compete. It's about coexisting and providing the best solution for whatever environment it requires. So we talked about embedded compliance. You can also talk about auto conversion. You get deposit token to USDC to local fiat, for example. The wallet can do all of that, so that's where I see that convergence, fiat, USSD, deposit token, and then this multi-rail orchestration. It's not about Visa's network or MasterCard's network or UPI in India or whatever it may be. It's about this multi-rail orchestration, but you've got one treasury, multiple tokens, each rail doing what it does best, and that's where I see this TCP/IP moment coming in. And I just have a little pitch here too. The incumbents or companies like FIS or MasterCard, we work really closely together with MasterCard. We are already building the rails for the future. We're bridging these, deposit tokens with, potentially stable coins in the future, with potentially programmable wallets, with these compliance engines. And most importantly, they've got this thing called AI that's looming over everything. AI is going to play a huge role in fraud and compliance and make it a lot more efficient. And this also then provides this enterprise-grade connectivity, such as B2B payments, account to account. All of this stuff will emerge, but it's not going to happen overnight. Regulatory, all these bits and pieces need to come into play, and people need to work together. So, if I can say it, these deposit tokens might be this what they call inside the perimeter economy, intragroup sweeps, high-value B2B flows, treasury and credit facilities, all bank grade with regulatory certainty. And maybe stable coins will be dominating the edge, cross-border supplier payments, gig payouts, IoT and supply chain settlements, 24/7 multiple bank payments, So it'll all play out, I think. But the most important thing is coexistence, working together, creating that TCP/IP moment as an ecosystem together.
Wonderful. That's a lovely appeal. David, just one question which we haven't touched on. What's actually the UK status on wallets? We've talked about Europe and Asia and Latin America and Africa. What's going on in the UK?
I think it's quite interesting. As I highlighted, there's still some, shall we say, not confusion, but I think there's still some development work going on in terms of exactly how much we're opening up the Apple NFC chip compared to the rest of Europe. And I think that's an interesting point here. But again, I'm going to come back to some earlier conversations on what is a wallet. Because we've got many varieties of what people over, I think, in the UK consider a wallet. And many people will be using wallets without actually realizing they are anyway. So I think there's no simple answer to you saying what's happening in there. Business continues as normal. We are, though, seeing what is in the press is a wallet called Curve over here, Curve Card, which was really the main competitor in the market for many times of many cards behind one, potentially being sold to Lloyds Bank for a fairly knockdown price, given its value. Last funding round was, I think, at 1.2 billion, and Lloyds are looking at buying it for about 120 million. So that obviously could be an interesting move in the market in terms of what's going on with wallets here, because that was the real competitor to Apple Pay across platforms at one point.
Right. So surprisingly, Europe seems to have more in the pipeline at the moment with digital euro, with Wero, with identity wallets.
Well, yeah, I mean, we've got the digital pound coming, but I don't view that as a wallet per se. I view that as an enabler.
Okay.
And much more. I've had many discussions on this with people, and I've been in the other panelists' views that things like the digital pound is much more a wholesale banking play than a retail play, probably in the short term.
Okay.
Well, the digital pound is just a digital currency. I mean, it's not a wallet.
Correct. Exactly my point. It's a wholesale banking play. Yeah. It's not a wallet per se, and therefore doesn't really enter this conversation.
But I will say, Michael, just to jump in there, I mean, that Curve acquisition by Lloyds is really important. It's a signal to the market that a leading financial institution like Lloyds is taking this space seriously. So it's just another step in the journey, or this evolution to this interoperability, or this orchestrating the ecosystem together, as a community. And I think that's the really key thing that I want to get across. It's important that gets noted.
Sounds like you have enough for another one, Michael, with the CDBCs and stablecoins. We could go on for another hour.
That would warrant a whole day's webinar, the stablecoin. Absolutely, yeah. But I think our time is gradually coming to an end. Maybe I give Annie a last chance to share any last thoughts he has before I would like to wrap up our webinar here today.
I think Paul spoke about conversions, and I think there was a question about in terms of why the SEPA network came into play. If you really see again the fundamentals of it is today banks can send money to a bank account only. It's an account to account network itself. It's a SWIFT network powers. What happens is if the same banks were allowed the optionality to also then send money to a mobile wallet using the SWIFT network. Think about it. It just opens up a completely different, using the same networking standards, using the same operating model, using the same technology. You're just opening up, 6-7 billion assets, which today bank consumers, and it could be anything. It could be P2P, it could be B2B, in any format, open up that network. I think that is, to me, when we speak about interoperability. Again, you don't have to kind of do everything, what SEPA has done, but I think to be able to make those, assets interoperable is what I think the future is. We're kind of, taken that one big step forward with SWIFT. I think it was last year, December, we made a big announcement. We've seen a significant, kind of a proposition where large banks, especially in the US, who kind of, had to be explained what wallets in Africa, wallets in Asia were, but give them that optionality of, using the SWIFT network, using the same MT103 or the PAC008 message, and now send a transaction real time to a mobile wallet. I think that is probably the next big step to create what I would call it this largely larger interoperability network. And that's where I think, and I kind of agree with Paul in terms of that's where the conversions are really coming through. These are the use cases which really come on the forefront. Eventually, we don't know in the next 20 years what this is going to look like, but I think those steps which are really required to make that convergence possible. And I think that's where I sit from TeraPay perspective is that's what keeps us exciting to take that next step forward, bringing wallets on the forefront of mainstream money movement.
Your enthusiasm certainly comes across. Thank you very much, Andy, for that closing statement, essentially. So thank you very much to everybody. You've been super lively, and I've tried to challenge you and disagree with you a little bit, because I think that's always more fun if we have a little bit of controversy and different opinions, and you've been very robust in your answers, and I think you've contributed a lot to the debate. I won't try to summarize everything we said. There is far too much. Anybody who's interested can watch the recording, which they will get afterwards. But I think there's a lot in there. I mean, global instant is going to happen for sure. And wallets are exploding everywhere. And now we just have to find the TCP IP moment also for wallets. So thank you very much for our lovely panel and the session. If you have questions, you can, of course, reach out to the Payments Association. You have the email, I think it's events@thepaymentsassociation.org. You'll get a summary and a recording of the webinar. And so from myself and from part of the Payments Association, I'd like to thank everybody for taking part in this. And I hope you enjoyed it as much as I think we in the panel did. See you next time.
Wonderful.
Thank you very much.
Thank you. Thank you.
Thank you, everyone.